They don't have secret bank accounts or suitcases full of cash. What they have is a system built to protect them. In 2018, Amazon made over $11 billion in profit and paid zero in federal income tax. While you're taxed before your paycheck even clears, the ultra-rich use legal loopholes, offshore shelters, and financial jujitsu to protect every dollar they earn. It's not a glitch, it's the game. And if you don't know the rules, you'll keep losing. In this video, we reveal exactly how the rich avoid taxes, legally, strategically, and unapologetically. Number 1. Writing off business expenses. The wealthy don't pay tax on what they earn. They pay tax on what's left. That's the first major advantage they hold. Instead of getting taxed before they see their money, like most employees, business owners get to spend first and pay taxes later. Here's how it works. Let's say someone owns a digital marketing agency and earns $200,000 a year. If they spend $100,000 on business-related costs, like rent, equipment, software, staff, or even travel, they're only taxed on the remaining $100,000. That's a legal 50% tax cut, just by knowing the rules. The tax code allows businesses to deduct what's considered ordinary and necessary expenses. Think laptops, office furniture, internet, business meals, training, or even that flight to a conference. These are all tax deductible, and the more you spend wisely, the less you owe. That's why the wealthy don't just have jobs, they have entities. By operating under an LLC or S-Corp, they gain full control over how and when they report income and expenses. Even side hustlers and freelancers can take advantage of this if they structure things properly. Meanwhile, employees get taxed on every dollar before paying their bills. No write-offs, no flexibility, no power. So remember, owning a business doesn't just build wealth, it shields it. And once they've structured their income smartly, the next move is to shift it somewhere the taxman can't even find it. Number 2. Diverting income to offshore tax havens. Once the rich earn their money, they don't let it sit where it's taxed. They move it to places where the tax bill disappears. These places are called offshore tax havens. Countries like the Cayman Islands, Bermuda, and Luxembourg that have little to no corporate tax and offer full financial privacy. Here's how it works. A US company earns $5 million. Normally, that's a $1.75 million tax bill. But by routing that income to a shell company based in a tax haven, it reports the profit offshore, and the tax bill drops to zero. This strategy is completely legal. Big companies do it all the time. In 2018, Amazon made $11 billion in profit and paid nothing in federal tax, using a mix of deductions and foreign income rules. Why do these tax havens matter? Because they don't require financial reporting and they don't share information with the IRS. That means money is harder to trace, easier to protect, and often taxed far less or not at all. This isn't just about saving, it's about control. The rich choose where their money lives, and by living on paper in a tax-free country, their profits stay protected. You might not be setting up offshore accounts anytime soon, but the lesson is powerful. The rich don't just earn smart, they locate their money smart too. And even if you stay local, there's a tax-saving move that anyone can use, especially if you've had a few losses along the way. Number 3. Netting revenues against past losses. The rich don't just protect profits, they make even their past failures pay off. This strategy is called a loss carry forward, and it's a legal way to use yesterday's losses to cut today's taxes. Here's how it works. A business loses $200,000 in its first year. 2 years later, it earns $300,000. Instead of paying tax on the full $300K, it applies the earlier loss, so taxes are owed on just $100,000. This isn't a loophole, it's a built-in rule. The IRS allows businesses to carry forward losses from bad years and subtract them from future profits. It's like banking your failure as a future tax shield. And it's not just for big companies. Freelancers and small business owners can use this too. If your business had a rough year, those losses could still save you thousands later. That's why many wealthy people don't panic when they lose money. They know how to turn it into long-term savings. And the next strategy is just as clever. It helps companies pay less tax without even spending a dime. Number 4, issuing stock options. This is how the rich lower their taxes without spending a dime, by giving stock options instead of cash. When a company gives someone stock options, that value is recorded as a business expense. And expenses reduce taxable profit. But here's the trick. No real money leaves the business. It's all on paper. For example, if a company gives an executive $1 million in stock options, they can deduct that amount like any other expense, while keeping their cash intact. Big tech companies use this to save millions in taxes while rewarding employees. It also motivates workers to perform better, because if the company grows, their stock becomes more valuable. Even business owners do this to themselves. Instead of paying high salaries, which are taxed heavily, they issue stock, cutting both personal and business taxes at once. It's a tax-saving strategy that fuels growth and keeps money in the system. And now, let's look at how some wealthy people save thousands in taxes, just by moving states. Number 5, moving to income tax-free states. This tax-saving move doesn't require a lawyer, an accountant, or an offshore account, just a change of address. Some U.S. states like Florida, Texas, and Nevada don't charge state income tax. So when high earners move there, they instantly save up to 13.3% of their income, just by living in a different zip code. For example, someone making $1 million in California could pay over $130,000 a year in state tax. But in Florida, that bill drops to zero. And this isn't just for millionaires. Remote workers, freelancers, business owners, anyone earning serious income can benefit by relocating. The rich understand that where you live matters. They go where their money is taxed the least and where their lifestyle isn't compromised. This is one of the simplest legal tax moves, and it's something most people overlook. It's not about evading taxes, it's about being strategic with location. And while moving saves you money, the next strategy helps you build wealth while slashing your tax bill at the same time. Number 6, investing in real estate. Real estate is more than just property. It's a tax-saving machine the wealthy rely on. When you own real estate, you can deduct expenses like repairs, mortgage interest, and depreciation. And here's the part most people miss. Depreciation lets you reduce your tax bill by claiming your property is losing value, even if it's actually going up. And when it's time to sell, the rich use the 1031 exchange, a rule that lets them reinvest profits into another property without paying taxes right away. It's how the rich earn, grow, and pay less all at once. They collect rental income, defer taxes for years, and build wealth while the tax bill stays on pause. You don't need millions to start. One rental property can put you on the same path. And next, you'll see how the rich go even further by controlling when they pay taxes at all. Number 7, deferring income through retirement accounts. The rich don't just avoid taxes, they delay them until it costs less. How? By using retirement accounts like IRAs and 401ks. Instead of paying taxes now, they move income into these accounts where it grows tax-free. They only pay tax when they withdraw it later, often at a lower tax rate in retirement. For example, someone earning $500,000 might defer income now, taxed at 40%, and pay just 20% later. It's smart timing. Their money grows, and their tax bill shrinks. The middle class pays as they earn. The rich, they wait, grow, and win. The rich don't cheat the system. They understand it better than anyone else. While others pay blindly, they protect, defer, and outsmart the tax code legally. Now that you know how the game is played, it's your turn to level up. If this opened your eyes, hit that like, share it with someone who needs to see it, subscribe for more, and drop a comment below. Let's talk wealth strategy.